So, as a real estate agent here in Los Angeles, I regularly get asked about opportunities for investing both outside of Southern California and multifamily and other types of investments besides fixed and flips and residential homes. One of the people I've met along the way is Trevor Thompson and Massive Capital, and we have a chance to talk about him and his company's program for investing. Trevor, thank you so much for taking time with us today.
Oh, it's a pleasure to be back. I enjoyed our last talk.
So just a real quick kind of introduction on LinkedIn. Trevor Thompson, Massive Capital is the company. You've helped over 1,000 people create financial independence, which is a pretty big moniker. And the organization is Massive Capital. And your current portfolio, at least on the website, is 1,300 units. And really, it looks like, what I've seen you guys present are investments for investors who are not looking to do it all on their own, but maybe tag along and learn with you while they do their investment. Is that a fair way to
That's
describe it?
exactly what it is. It's referred to as syndications. And basically, with a syndication, there's a group of partners. They're called the general partners. They find a deal, they sign everything, they do everything, and they accept investments from limited partners who are passive investors, but actually still own a piece of the real estate, still get a piece of the depreciation, get all of everything they do. They just get a percentage of it. In fact, they're the largest shareholder other than the bank in most of our deals that we're doing.
So, and just a real quick kind of housekeeping as to who we are and where we are. This is the Los Angeles County Real Estate Investors Association podcast. We do this, we air this live Tuesdays, 3 p.m., 6 p.m. Pacific time. And then we meet in person live in Southern California on the second Thursday of the month. We hold an event with a speaker. We get about 250 people there. And we have a vendors expo. Upcoming December 14th, Out of State Investing Summit is the topic that will be discussed. And then January 17th is the boot camp. So if you want to come December 14th, Real Estate Investors Expo, it's a free event. Starts at 6:30. And like I said, there's 250 people in attendance, as well as about 50 vendors like me to help you along your real estate business and or build your investment and wealth strategies as you go along. So Trevor, talk a little bit about how you got into offering real estate investment to other people. I mean, it's one thing to do your own investing, but how did you get into the business of inviting people to join you and or kind of holding them by the hand along the way?
Yeah, so about 25 years ago, as many people, I read Robert Kiyosaki's Rich Dad Poor Dad, and it totally enlightened me to a whole different world and a different way of looking at it. But I did what many people do. I kept staying on the Monopoly game, going past go, collecting my paycheck, running around, and always was afraid of single family. I was afraid of toilets, tenants, and trash. I didn't want to do it. And then finally, I got a payday at work where a company got bought out by private equity. I got killed on income taxes that you do with ordinary income. And I went, I really should have started this real estate. So I made it a mission to figure it out. And then I stumbled across syndications. And I thought, hold on a minute. I understand this from the business world, right? You buy a business, you improve it, you sell it for a multiple of its EBITDA. Here you buy an apartment complex or another business, you improve it, and you sell it by a multiple of the NOI. And I was like, where has this been my whole life? Why didn't I find it till later? And long story short, I made my first passive investment within 7 days of that going to that conference. I've done 31 deals. 11 of those I'm actually on the general partner side. 20 I'm 100% passive. But I also always invest in deals where I am a partner in the deal, because you should always invest with people that have their own money in the deal as well. And it's been life altering. It's just it's an amazing thing. And we all know there's a housing shortage. We all know there's the biggest gap delta from what your income provides you on a mortgage with these high rates versus an apartment. And apartments have never been more attractive, even though there's lots of crazy things happening, just because a lot of people are still going to stay there. There's just no way to get out and get into the housing market. And even in places like Texas, where I live, we don't have the high California prices. We're getting there a little bit, but you can't afford it. So you have to stay in an apartment. and we buy them, we make them better, we make them safer, we make them nicer places to live, and we make investors money along the way.
So, talk a little bit about, because I know one of your latest offerings as an organization was more of a retail commercial
Right.
property than residential units. I've always looked at your properties and to invest in as a limited partner because I prefer multifamily. But I see you've also, is this a one-time thing? Is this a
It is a,
move?
so we are going to be merging with a company that does a lot of new build development. And what they did in the past was they're basically called merchant builders, where they bought some land, they entitled it, they built it, they leased it, and they sold it. But with the tightening up of the financial markets, it's much harder for them to get money.
Yeah.
And so they came to us originally just asking if we would raise capital. And we said, well, we're not interested in just doing that, but we are interested in partnering. And so we're now being able, so, individual investors can invest in a new development deal. We all know shopping centers and other things are under duress, but small retail developments, things you can't buy on Amazon, high demand, and especially in growth areas. So this one's in Austin. And so basically we take the combination of everything. We bring the investors in after the land is entitled. So that's de-risked. We get the permits, we build it, we lease it up, and then the investors get bought out of when we sell the actual property. And the nice thing about it, in the current world we're in right now, it's about a 3-year hold versus a 5-year hold from multifamily. It's still offering very, very good returns.
Yeah.
And it just buys us a little time while the market is a little bit upside down right now in the multifamily business. And it's a business that's always survived in a higher interest rate. Obviously, not as high as it is right now, but normally on development deals, they're not getting the cheap money like multifamily or some other ones are. So, and again, you have to be bold enough to sign recourse debt because all of the development deals are full recourse debt. Where on multifamily, it's non-recourse, and all that means is if the thing falls apart and fails, the bank can't come after you personally, but on a recourse they can.
Now, when you say recourse, you mean to the general partners, but not
That's
to
correct. Not
limited partners. Limited partners,
Limited partners. The only risk they have is whatever capital they invested.
which is an important distinction. And there's a lot of stories here over time about celebrities and athletes who invest and lose fortunes. And the reason there is they were unwittingly signed into being general partners
Yes.
and therefore at risk. And they were used because of their high income to qualify for financing that may not have made sense. When the deal went sideways, that didn't work out for them.
Yeah.
So as a company, you work with investors both who are qualified, I believe, and non-qualified based on the project,
so
right?
it's accredited is the sort of the proper term. So somebody who's accredited has a personal income of 200,000 or a family of 300,000 or more, or they have a net worth exceeding $1 million, excluding their primary resident. And then one thing we actually do quite a bit different than many groups is we start our deals off as a 506B, which is open to sophisticated investors, but we must have a personal relationship. So I have to know you, I have to know about you. And to be honest, that law, I call it protect grandma's money. And it's a good law, where we're doing it. And then once it becomes a 506C offering, only accredited investors can invest. And of course, the government in all their wisdom has said, if you're worth more than $1 million, you're probably smart enough to make your own decisions. But I'm here to tell you the sophisticated investors are actually way often more educated because they're risking everything they've saved. They're risking their life savings, or when I say risking, that's the wrong word. They're investing their life savings. And that's a big thing to do.
So you have some of both. I guess it depends on, is it each project then?
Yes,
And
and
some
we've
start
actually
as
found a
being
mechanism where we convert them. So we actually start them as 506Bs, about 3 weeks, and then we convert them to 506C. And the reason we convert them is then we can mass market them.
And by then you also have some sophisticated investors who are on board, which should make a newer investor or maybe
That's correct.
unaccredited investor a little more confident that they're not only going after non-sophisticated investors,
Yeah.
but the opposite, that they're following in with some people who might know what they're
Yeah.
doing.
And it also helps our team. So we have a lot of new people that are new in this business. And it takes a while to build up your, we call it a Rolodex. It's not really a Rolodex anymore, but your database of accredited investors. So most of your friends and family may not be. So this provides, I'm going to call it the average person that has a relationship, but they have to have some understanding, right? They have to be called sophisticated. So it's not like, you have to be able to get some good education, and Massive Capital provides a lot of free education. And that's why I'm happy to get on these webinars too with you. Just try to get the word out there that this is accessible to the average person, which who in there, until I found out about syndications, I never thought in a million years I would own an apartment complex. And now I'm an investor in 2,500 of them. If you think it's mind boggling.
I mean, I would say I agree with you. I didn't know that was possible, until maybe 5 years ago. And I'm an investor in 2 different projects at this point. But I get checks every quarter, like I'm a wealthy guy, just hits my bank account. It's kind of nice. And
It is.
I never did well. Flipping always drove me crazy emotionally. And I just never found the right cash flow properties. And here, I have a couple, and it's been a nice addition to my savings and retirement and all that.
Well, and it's the big difference that it's your money working for you, not
Correct.
you working for your money.
Correct.
And that's a huge differentiator, right? Warren Buffett says, until you figure out how to make money while you sleep, you'll work until you die. And so your money, you're sleeping, and your investments making money. People are in their apartments, in their retail stores, paying rent.
Right. Yeah, I think that's the key thing is I do work hard, and I want my money working too hard for me. I don't want to work so hard that gets exhausted and drops dead of exhaustion. I want my money to work hard consistently for me, finding good projects. And I think, to be honest, and I made a joke about it, but the reality is I do want projects that are good. I don't want projects that look unbelievable, because I've seen so many of the unbelievable projects turn out to be not worthy of belief for a reason.
Correct. Yeah.
Right? So let's talk a little bit about meeting your organization. Obviously, people can look at a project and say, well, it looks good on paper, the numbers, the property, this and that. But a big part of it is going to be the general management, your arranging of the financing, your capital structure, and your ability to respond when things don't go well. How does one get involved to know you? Obviously, this webinar is an introduction. We're going to share your contact information. But what are ways that people can get to know you well enough to open up the checkbook and say, I want to partner with you on a project?
Yeah, so first of all, we always try to get one-on-one calls with people. But to do that, we offer a lot of education. So for example, every Wednesday night at 6 Central, we have a free webinar. It lasts for about an hour. And we always have a topic that we talk about. So this one is, how much you're going to have to pay Uncle Sam. Are you prepared? Are you going to have a surprise and owe him some money? Because there are ways to invest in things with depreciation or to do certain things. And we offer these all free of charge to try to put some value into the marketplace, to try to get people to educate. So we do a lot of that. But at the end of the day, it's getting to know us and spending some time with us. I don't expect anybody just to click on our website and send us a check. It's just not going to happen.
Right.
You want to get to know people. They talk about you get to know, like, and trust. And that takes a few phone calls. That takes building a relationship. There's a lot of ways that we try to add value to the community to make people feel comfortable.
And I'll just share everybody watching this call, and a lot of you are newer investors and want to get involved, that's why I do these calls myself, is to vet the partners and see them up close. Also, that's why I go on to other webinars, not just the one Massive Capital hosts, but I've seen Trevor on other organizations. There's a lender who hosted an event, and watch their participation and watch how are they recognized by other investors and other vendors in the industry. And when you see them being respected, when you see them being interacting at a business level, you realize they're not just fly by night. And so that's one of the things that I've done is done my research by going to various events online, and the online process has been great as a way to learn that. So
Yeah.
that's been fantastic. Talk a little bit about psychology. I'm sure you meet people along the way who come into your ecosystem. They learn about you, they learn about your company, they learn about investing in general, and they're just right at the precipice and are scared to make that first check, whether it be with you or in general with as a limited partner, and then jump off and get into it and appreciate it. What do you think it is that helps people make that push or that leap of faith of a bit to then successfully be able to reap those rewards?
Yeah, so for me personally, it's getting them to trust me, getting them to believe that I have their best interest at heart. Maybe people believe this or not, but I tell people you're not ready to invest yet. Um, I got to do that. I want to sleep at night. I
Yeah.
don't want people like worrying about things and doing things. In fact, our whole team is that way. There are groups that they don't care. They just want investments. There's lots, so you need to find people that truly want to get a genuine relationship with you. They'll answer questions. They'll reply to your emails. They'll reply to your texts. I'll be honest. I made a couple investments early on, and they all talked to me before they got my money, but they didn't talk to me after they got my money. So it's very, and then again, when you go to these meetups and you see somebody saying, "Oh, I know Trevor," well, talk to them.
Yeah.
I know other people, talk to them. I mean, if anybody called and asked about you, Bill, I say good things about you. We've had a great relationship in the last couple of years, and you want to make sure that you verify. You worked really hard to get after-tax dollars that you want them to work hard for you
Yep.
in an environment where you feel comfortable. But I'm not going to lie, I had a first-time investor, and he did a fairly sizable investment. He'd never done a passive investment before. And he was at the bank, and he did it, and he said, "Man, I was shaking when I pushed that cent, because he had to go to the bank to wire the money." And and then I saw him on a call that night, and he was so excited that he did it. So excited. He felt like he started a new journey. And and there was 50 other people on that call when he got on, and we congratulated him, and he was so excited.
Yeah, it is challenging to get that first one. I know I felt the same way. I started my first investment before I did as limited partner was through Grant Cardone. He had like a fund that was multifamily based, and what I liked about that was he sent you all the documents and treat you like your investor.
Yeah.
And then once you see and you learn the process a little bit and the nomenclature, then when the next company gives you the documents, it's not just a bunch of forms, you're actually looking for certain key things. And I think that's the key is if you understand the numbers. I think the other thing that helped me get comfortable is seeing somebody like you in multiple places. Like if I just see you on your company website, you always wonder, are you real? Is it just recorded? Are you really in the Bahamas to avoid prosecution along with that FTX guy? Or are you real? But when I see somebody like you on your company events, I see you on other industry events for a long period of time, not long, but a couple of years, but week after week after week. And it tells me that you're substantial and that there's a risk to you of failing, right? That's how I feel.
It definitely is. Yeah.
If I was to do something wrong to somebody, I have a whole business that'd be at risk. I'd have to make it right, and I have to treat people, properly, or else, I run the risk of not being able to be public with my business anymore. And so that's what I'm looking for. And there are a lot of people I found who I've interviewed like this, who I can't get a phone number, I can't get a text to them, I can't get their email. They're so busy that you can't even connect to them. That's always to me a dangerous sign. I always feel like. And I'll just share just one quick lesson I learned. I just finished reading Elon Musk's biography by Walter Isaacson, an amazing book, an amazing human being. And he was describing trying to meet with Bill Gates. And I want to get into who's the good guy or the bad guy here, but it was fascinating how when Bill Gates wanted to meet with Elon, he said, "Well, have your assistant call my assistant and we'll set up." And Elon said, "No, I do my own calendaring." And he said, "I'm never too busy to manage my own calendar. That doesn't mean that I let anybody book in. It just means that that is ultimately where we spend our time." And it was just fascinating. He wasn't too busy to set an appointment. And yet I've tried to interview other people in this industry who are literally too busy to talk to 50 or 100 people at a time. And I'm thinking, if you're too busy to do that, you don't want my money. That's just not, or maybe you want my money. I don't want to invest it with you. So I really appreciate you being here.
No, I'm glad to be here.
So obviously you guys have some great resources. What are some other resources available to help somebody who wants to learn about investing multifamily in general, or the importance of real estate investment? Where would you direct them to learn and grow along the way?
I do have a YouTube channel with my name again.
Great.
And on there, I list a lot of books, not only real estate investing books, but books just like the one you mentioned, Elon, is a great book.
This is Trevor.
And I'm an avid, listener. So my record was 100 books in 1 year, but I averaged 52 books a year. And every Wednesday I post a book that I recommend.
Oh, nice. Now, where's your list of books?
I think if you go under playlists, there'll be one on.
What am I reading? Oh, look at that.
Yeah. And so the first one up there, Passive Investing, is a great book for anybody looking to learn about passive investing. It's written by a local Austin person. I was actually part of his mentoring program for about 18 months. He stopped it. They just got too busy, but a great guy. So a lot of these books are real estate investing, but some are just pure business, and some I just loved. Like, you did the Elon Musk. I just did Bill Walton's autobiography. What an amazing journey. What an amazing journey. And then Jeff Bezos, the Everything Store. What an amazing journey. Like, how many times, and even the Shoe Dog, which is about Phil Knight. And I mean, just an amazing journey. So I don't just do real estate books. I do books that I read them and go. I mean, there's a couple of those where I used to drive to my office. Now I work from home, where I would sit in the car and finish the chapter. It was so good.
It's funny. I read probably about 25 or 30 books a year. I often like bigger books, like history books, or so the last 30 years I've read, 600-700 books. You add it up on the pace, and I read 3 novels and 2 were by accident. Because I find real life so much more fascinating than any story anybody could create. The reality, a couple of stories that you mentioned, they're just fascinating. I also just read Michael Dell's biography.
I have not read that one yet. Yeah,
it was good.
I do Audible because I travel a fair bit through Texas to go to in-person meetups. And I try to go to the gym for an hour every day, and it's an Audible, and my car is always my Audibles on all the time. And if I really like a book, then I try to listen to it more than once, just so it sinks into my thick head.
I've done Audible. I just don't. I started about holding a book that, to me, still, maybe because I'm old, there's no pleasure like that, turning the pages, and I don't know, that's just my style. I've tried Kindle.
And I do it on vacation. So if I'm going on vacation, I've always lug a big book, and I actually try to gift it to somebody so I don't have to carry it back.
That's a good idea. I like that. I never thought of it.
Yeah, so it was funny. I brought it I was in New Zealand for 5 weeks, and I brought the book at dinner at night just to read it, because you're sitting by yourself eating dinner. I was all by myself, and the guy came over and chatted with me, and he was fascinated, and I actually hurried to finish the book so I could give it to him before I left.
That's funny. Oh, wow.
Now, that was Keith Richards' autobiography. It was almost 900 pages, but again, talk about a crazy, crazy life.
Must be. That's why it wasn't on my list, but I have to think about that one.
When Keith Richards has to take care of his child because the mother's not suitable, that's got to be a heck of a mother. It's like, wow.
Wow. Wow. When Keith Richards is the same one of the parental team, that is really.
Yeah, but it was a fascinating book again about, he was a tell-all. He told everything.
Well, okay, so we're going to recommend then your channel, and then if you hit the playlist, you'll catch the book reading list. And really, I just went to YouTube, K. Trevor Thompson, and it's at K. Trevor Thompson is the YouTube channel. So highly recommend. I just subscribed. I've watched some of your videos from time to time. I don't know that I didn't subscribe for whatever reason. So maybe I hadn't watched anything for a while. So anyhow, I definitely recommend there as well. Great resource. Okay, and so looking forward now, we're now talking in late November 2023. We had rates run up from 2.75 a year ago to slightly over 8%, back down lately to a little below 7.5%. We had sales at record pace, now down to low pace on the order of the lowest in the last 15 years or so. Home values are staying about the same. Rentals up, rentals down. Markets like Austin, blowing up positively and then adjusting dramatically as well. How do you see the next 6 months, year, or how do you manage the risk of those changes personally, and then how do you look at that in terms of your investment strategy?
Yeah, so we've always been very careful to not get into floating debt situations, and unfortunately, not everybody's been in this bucket, and there's going to be a lot of deals that are going to come up for sale, and under very unusual circumstances. So they will be cash flow positive on the NOI side, but with the new interest rates, they won't be able to survive. They'll end up being cash flow negative, which is bizarre. So some of those properties will come up for sale for sure, and there will be some stress in the marketplace. So it is a buying opportunity, right? When the tide goes out, is again, I'm going to quote our buddy Warren Buffett, then they find out who's swimming naked, and there's going to be some people doing that, and it'll be a buying opportunity. Even our most recent deal, we started in February negotiating on it, and basically waited it out till the seller put a realistic price for today's marketplace. And we got about a 15% discount, which is substantial. It wasn't like it was way overpriced, but with the current situation and the stresses in the marketplace, it's no longer a seller's market, it's a buyer's market. So there'll be some opportunities. Part of the reason we've switched to new build development, it also buys some time, because those deals are not afraid of high interest rates, right? We're locked in at a fixed 8.25, and the deal works at 8.25. So it's not like that's going to jump to 10. And then if interest rates come down and we can have the ability to refi, it's even better.
That's always been tried and true. Is if the deal cash flows, it cash flows.
Yeah.
And yes, there are times when cash flow can change, but generally cash flow doesn't change if your debt's locked in. Where people get in trouble is the assumption that rates are going to be the same 2 years from now when we refinance, and that's where you get caught and the water goes out.
Yeah, and again, it's never unheard of to go from the lowest interest rates in the history of mankind to not the highest, by the way, but to certainly highest in many investors' lifetime in the last little while. And it eventually has to stabilize and come down. I don't think they needed to make them as high as they did. I think they could have been a little more prudent, but they chose not to be. And they didn't ask me, so I guess I don't have a say.
Interesting. I'm kind of creating a YouTube for the end of the year with some predictions for next year, which I've never really done before, but I thought it'd be kind of fun to do. I want to predict. I'm one of the few people. I don't think rates are going to go down next year. I think unless something changes. Now, if somehow the government starts paying down debt, I think rates will go down. But I'm of the belief that this is the new normal, and it's going to be like this for a while. And so you have to, I think, be prepared for that. And on a personal level, that means watch our expenses, no debt, have extra cash flow, deploy cash where we can to get a cash flow, but don't do anything that doesn't create a return. And I think if I've seen people who bring me value-added investments where they're doing bridge financing, expect to refinance. If they don't have an interest rate, guarantee, I don't want to worry about where they're going to be 2 years from now because
And we also at Massive believe, and I'm not the economist guy on our team, but we have a weekly call where they actually look at all the trends of interest rates, all the predictions of several people that are normally right. And the only thing that is a bit of a caveat is, will somebody artificially lower them quicker for an election result? Who knows?
I think they like to. I think there's no question that there's the political force, but I just feels to me like that it's just been done so much now. They've lost their ability to manipulate that, and the market's rejecting, I think, their ability to go much. But we'll see. That's
or
why
someone promised they will and then win on the promise. Who knows?
maybe we'll see. That's why there's investors, because everybody knows the answer, and you got to play it smart. So, well, and so then that said, on a personal level, going forward, obviously you want to work with prudent investments, and I think you make the point also that that's the opportunity, right? This is why I'm working hard now. I wasn't working last week, but in general, I'm working hard to make money, to have excess cash to invest in what may be a historic opportunity coming up in the next year too, as people have challenges. And the challenge is to kind of look through the wreckage and realize those opportunities and have the courage to be the sane force.
You think of any of the big resets, it's always where millionaires are created. Always. It's now, is there blood in the streets for a few people? Absolutely.
Right.
But that's when the biggest gains are made, during the biggest periods of disruption.
And you see that, we talk about the stories of some of these successful people, that you see that really they built their businesses enduring through the pain of difficult times, so that when things were better, they had strengthened themselves to be able to capitalize on it. That's certainly Elon Musk's story, Jeff Bezos' story. I mean, you read these stories of people who they had to endure some incredibly difficult situations, but that made them stronger, so that when the market improved, they were rolling downhill with great momentum. And so for all of us, I hope next year we have the opportunity to take advantage of it. I think there's opportunities for everybody to have lifetime improvements of their income and their wealth. And so I'm really committed to trying to help as many people as I can along the way, as I know you are, Trevor. So just to kind of wrap up, this is the LA County Real Estate Investors Association podcast. We do this every Tuesday, 3 p.m. live. YouTube, Facebook, and LinkedIn. If you have questions or comments there, put them there, and I'll respond to them or get them to Trevor as appropriate. And then we have a live event every second Thursday of the month. Is our big get together. It's in the Rancho Park, Palms, Culver City area at the Iman Center. It's free. We got about 250 people in the room, about 50 vendors like me to help you. Upcoming on December 14th, it will be the Out of State Investing Summit, so you can continue this conversation or topic. I'll be there. I'm the live podcast at the event. And then upcoming January 27th is a boot camp. That's not free, but is definitely cheaper if you sign up now. You can see that it's $149 before December 2nd, so take advantage of the opportunity as well. All details at lareic.com. Our guest today has been Trevor Thompson, Trevor Thompson on LinkedIn, and as well from Massive Capital. And Massive is a massive organization that does investments for investors like you and me who want to become limited partners along with their investments. It shows here their current opportunities. It also shows their past opportunities. And then the resource page has the webinar. Definitely worth checking out. I jump on that from time to time as well on that webinar. And let's see. Oh, we did talk about a sample project that I think is available now. Do you have a few minutes? We talk about Harris Ridge?
Yeah. So Harris Ridge is a new build retail development in Austin. One interesting point in Austin is Austin, oddly enough, is really stingy with permits. So this is only one of 2 permitted in this geographic area, which gives us a little bit of a monopoly on it. It's a 3-year hold. We do have a 7% preferred return, which means investors get paid the first 7% on their money before us as general partners make anything. It's a 1.72 multiple of your money in the 3 years. So again, if you put 100,000 in, roughly, again, these are all estimated projections, you'd get 172 back in 3 years. And that converts to what's called a 20% IRR, which is an internal rate of return. So very interesting. That's the time use of your money. That's an important number, because if I can double your money in 10 years, that's only about a 8% IRR. But if I can double your money in 5 years, that's a 17% IRR. So the higher the IRR, the faster your money's working for you. But that's definitely a great deal. We're very excited. It will hold the 5 or 6, tenants within the space. So we're very excited.
Minimum investment is $75,000.
Yes.
And this is 503C, which means
506C, so accredited investors only.
so accredited investors only, and that means people with a relationship, and then they'll be accredited through a process. If you're interested, contact Trevor and or Massive Capital, and they'll help you with that process. But again, not from me, and I'm looking for multifamily in particular, but I love looking at their projects, and I know he has another one coming up here shortly as well. We can't talk about, but they have a pipeline of product, and I think that's the important thing, is you want to connect with people who can
And
present you good
nicely,
opportunities.
that one's only 20 minutes from my house, so I can go watch it being built.
Can you walk there, or do you have to drive there?
No, I'll have to drive. 20-minute drive, yeah.
Okay, well, very good. Well, maybe if it's a 20-minute drive, maybe it's about an hour walk or something. Maybe we got to get you out a little bit.
Maybe, yeah. Listen to a book.
Get you a dog or something to keep you busy there. Well, look, Trevor, it's always a pleasure to chat with you, and informative. Sure. I appreciate your time. Thanks for sharing the information you do and being part of our program today.
Awesome. Thank you so much.
And again, the rest of you, we do this every Tuesday, 3 p.m. Pacific time, 6 p.m. Eastern. We live stream it on YouTube, Facebook, and LinkedIn. If you have questions, feel free to put your comments in there or questions. If you like this, like it, subscribe, share it, all that good stuff. I'm Bill Gross. You can find me at Bill Gross Probate on social media. And hope, as always, make